Federal Reserve Bank, United States. 1, it's not a bank. 2, it's not federal. 3, it's got no reserves. So the Federal Reserve, the current Fed, was created in 1913. Interesting rabbit hole to go down. If the Titanic does not sink in 1912, there is no Federal Reserve in 1913. Also in 1913, we got the income tax and the IRS to go with it. So they create the Federal Reserve in 1913, and it exists to backstop the rich. There's a wonderful book called Creature from Jekyll Island. It's a fabulous book. I'll link to it below. I recommend anyone to go through that book. It's absolutely fascinating to actually learn the inner workings of the Federal Reserve. So the Federal Reserve is not federal. It's a privately owned entity. We don't know who the shareholders are because they don't have to be accountable for who they are. We assume that a lot of it is like JP Morgan. We assume that there's some London or European interests in there. The Rothschilds, obviously. We don't really know. Like, there's no, like, here are the shareholders of the Federal Reserve. Like, we have no idea. But it's there to backstop the rich at the expense of the poor and middle class and essentially monetize the debt. So what they do is, as the federal government spends more than they tax, the Federal Reserve is there to buy their bonds, particularly when no one wants to buy their bonds because the interest rates are so darn low. The reason the interest rates are so darn low is that the Federal Reserve has this magic box where they can pick the price of interest rates. So therefore, they dictate in the economy how much people are saving or spending based on the interest rates. Think about this. A 10% interest rate incentivizes you to spend less, particularly if you're spending on debt, and save more because you could get paid an interest rate on your capital. A 0% interest rate incentivizes you to not really spend whatever you want because, I mean, it's 0%. Technically, you could loan at these rates. And why would you save? Especially because a 0% interest rate will typically bring with it more inflation than you will have when the interest rate is, say, 5 or 6 or 10%, because money supply contracts. So the interest rate allows the Federal Reserve to expand and contract the money supply. And by doing so, they get to manipulate and control the economy. The problem is now we're more than 100 years into the Federal Reserve, and they've backed themselves into a corner where they've brought interest rates essentially down to 0. This is an issue because where do you go from here? People say negative rates, but why would people keep money in any sort of banks if they're going to get negative percent interest rates on them? So they say this can't work. It's kind of the pitch for a digital dollar, where you could incentivize people to spend their money within a period of time. It's called behavioral finance, and I'm completely against it. I believe that people should be left alone to make their own decisions. But the book Jekyll Island is the Creature from Jekyll Island is probably the best book on the Federal Reserve. And like I mentioned before, it's going to be linked below. But Jekyll Island is an island off the coast of Georgia where JP Morgan and a bunch of these banking interests met and basically laid out the framework for the Federal Reserve, brought it to the Congress, and then had them approve it. There's a Federal Reserve Act of 1913 that they're supposed to abide by. And they're not abiding it. You may have heard of a guy named the rebel capitalist, George Gaiman. He's got a class action lawsuit against the Federal Reserve, basically suing them from discovery so that they can go back in time and see exactly what the Fed has been doing. But the long and the short of it is that the Federal Reserve exists to backstop the rich at the expense of the poor and the middle class, and they do so by monetizing the debt of the federal government and manipulating the interest rates. And because they're the lender of last resort, they buy things that they're not allowed to buy, like junk bonds, and they backstop things like we saw after the pandemic or during the shutdown period. The Federal Reserve just monetized all that debt. You have the US government going and spending trillions, and the Federal Reserve is buying their bonds and expanding the balance sheet. Essentially, not really printing money, but basically printing money. If you look at a chart of the US dollar since the creation of the Federal Reserve in 1913, all the way down to what it is, now they've basically eroded 99% of what an original US dollar was worth. In fact, before the creation of the Federal Reserve, or at the moment of the creation of the Federal Reserve, gold was $20 an ounce. Silver was $1 an ounce. On a US piece of silver, US minted silver, you'll notice it says $1 US. The word dollar actually is a unit of weight. It's 1 ounce, thus dollar. So the Federal Reserve, at this point in time, and there's some speculation that the Federal Reserve controls the price of precious metals, silver and gold. But currently gold is trading around $1,800 an ounce. And you can go to a website called Shadow Stats, and I'll also link to that. And Shadow Stats would argue, based on the fiat currency that's been printed into circulation, the price of gold needs to be a lot higher, like $34,000, $35,000 based on how much they've printed into circulation. Now, the Federal Reserve doesn't necessarily print it, that's the Treasury Department, but the Federal Reserve monetizes it and essentially loans it. So they're not really creating the dollars that are in circulation, but they are loaning those dollars into circulation to be spent by different entities. Some are private interests and hedge funds like BlackRock. Federal Reserve, interestingly enough, also owns a vast majority of the mortgages in North America. So you go to the bank and you get a mortgage, and then your bank doesn't really hold that mortgage. They actually sell that mortgage off to an entity like the Federal Reserve. So the Federal Reserve is the largest landowner, true landowner, of these debt notes, provided these debt notes were to default, which at some point in time, it'll probably be in their best interest to allow things to erode in a way where they could foreclose on everything. So essentially the Federal Reserve, in my own bias, is there to buy it all. There is no reason that we have a Federal Reserve. Our society is literally in decline. Wages are flat. Things continue to become more expensive because of the Federal Reserve. And every time you hear them out, you hear them talking about their mandates of full employment and low inflation. And now they're adding in climate change and racial justice and all these things that you can't solve in the banking realm. But they are not an actual bank, and they're not federal, and they're owned by a bunch of people that we don't know who they are. So it's a extremely corrupt organization, but you will see almost no political will to remove this organization. I actually had a chance to go into the Federal Reserve. At the time, Ben Bernanke was the chair, and I got to sit in his chair at his desk and at the head of the table where he had a office there in Washington, D.C. So I got to go to the Federal Reserve Bank of Washington, D.C. I do believe most of the time he worked out of New York. But I got to go there and actually, we went on a little trip there in college for my finance studies. And it was a creepy place. It has a weird, it has a weird vibe to it. The room I got to go in was the room, and they have a big plaque on the wall right above the mantle. There's a beautiful fireplace there. And it has a plaque that in 1940, whatever it was, this was the room where the decision was made to drop the atom bombs on Japan. And you can feel that, you can feel like a dark energy in that room. It was also the room where Hank Paulson, during the financial crisis of 2008, they made all these, the TARP program, troubled assets, and all these programs that essentially what they've done is they've printed through quantitative easing, which is a fancy word to say counterfeiting. They've counterfeited their way into buying these troubled assets. So the Federal Reserve continues to buy these assets and then just monetizes debt and has gone completely unchecked. And it's genuinely a sad thing for our society because, like I said, the wages have remained flat for the working and middle class and the poor, as opposed to, on the flip side of that coin, the wealthy have been able to buy assets at extremely low interest rates. And those assets have inflated with the Federal Reserve's balance sheet, creating this wealth gap that is really not fixable in our current society. So it's probably not going to end well. Everybody kind of sits there and waits for the end of the Fed. There's no political will to end the Fed, so at this point in time, we're going to have to wait for them to back themselves into this corner that they've definitely backed themselves into, which is the interest rates are basically zero, the economy is in a decline, the inflation is at 6%, and that's their numbers. The real inflation on Shadow Stats is like 15%. You tell me what you buy in the comments and let me know what you think the inflation is, but I can tell you my personal inflation on things I buy is definitely up 25, 30%. I'm buying a lot of wood this year and building a house, so my inflation's up pretty high right now. But they have, the only way to get that genie back in the bottle, if you will, is to raise the interest rates, which Paul Volcker did in the 80s with Ronald Reagan, and he raised the interest rates up to 18% to nip the back of inflation, post the Carter years of stagflation. If they were to raise the interest rate, say to 5%, like they were when I was in high school, the entire economy would collapse. So at some point in time, it's my guess that they will do that. They will have to do that. The economy will collapse, And at that point in time, they will have a convenient Fed dollar, a crypto Fed thing. They will jump over the banking sector and they'll be like, here, use our Fed dollar. And I believe that this will be the revolution of, I think this will be a 250-year revolution, period of time. And I am obviously for the people, and I think then I side with the people. But ultimately, at the end of the day, during my lifetime, I hope that we do not have central bankers running the planet. One little thing to go down a rabbit hole, in September of 19, I got on Instagram. If you guys are not following my Instagram, check it out. It's OnSiteTrav. I got September of 2019. I went on there and said, hey, the repo market dried up to the tune of $1 trillion a day. This is a repurchase market. This is a market where there's a lot of YouTube videos on it, but essentially it's like large companies will trade things on their balance sheet, mainly bonds, federal U.S. security bonds, like U.S. bonds, things like if you're a large company and you've got maybe 20 million bucks in your banks, you don't want to really keep it in the bank. So what you do is you buy a bond, and then you need some cash flow because you've got to pay things, you've got to pay supplies, or you got to pay things like that. So what you'll do is you'll loan against your bonds, you go to the repurchase market, and then you'll get like 30-day, 60-day float, and you'll exchange your assets, and they'll give you the actual cash, and then you exchange back and forth. This market dried up in September of 2019. Interestingly enough, what that was signaling was the economy is weak. These companies are becoming illiquid. We don't know who was borrowing to the tune of $1 trillion a day, what companies those were never listed. But we had this black swan event 4 months later that allowed the Federal Reserve and the US government to print unlimited amounts of currency as they saw fit, which happened to create a round of bailouts that was so much greater than what we ever saw in 2008. And I would have definitely said in 2019, the attitude for another round of bailouts would have been very distasteful. However, you have a global shutdown and scary health concerns. Then all of a sudden, people don't really care that they spent $10 trillion to bail out things like the airlines and people that are not necessarily you. Although I think a lot of you got your stimmy checks. You guys got a couple grand, so congratulations. But the national debt grew to a tune where we will never pay it off, and we'll either default on it honestly by just defaulting on it, or we'll default on it dishonestly by inflating our way out, which is why the US government has the Federal Reserve. So check out the creature from Jekyll Island. I do think that we are going to see a revolutionary-like event and in my lifetime, and I do think that the people are going to take back control of the economics and particularly the currency, and allow interest rates to float and be real and not fake. And that is the move to DeFi, decentralized finance, as opposed to the fiat dollar system. But I do think that when this thing comes down, it's going to be ugly. Peace.